I'm at the bank making money, making moves. Machines with tools and drills, making grooves. Missions impossible.
Welcome back to In the Green. This is Nora Lee, and I'm very happy to have Kevin Rich with us today. Kevin, how are you?
I'm good, Nora Lee. Thanks for having me.
It's wonderful to have you. For those of you who don't know, Kevin is the President and Chief Compliance Officer of the Invstr US entity. Kevin, tell our users, where are you based?
So I'm based in New York City, in the East 80s. I have an apartment here that I've had for many years.
Right.
Two daughters, kind of grown up and mostly out of the house, but sometimes coming back. One's out of college, one's back in college and grad school. So very happy and proud of them, but always happy to see them come back for visits.
Well, of course. Well, that's fantastic. And you are very seasoned in the markets. And I know you were at Deutsche Bank, where you were a CEO of the commodities business.
That's right. I was at the Deutsche Bank from 2003 to 2009. It was kind of during a big commodity boom. A lot of people were interested in commodity index investing. And so we created a whole platform of ways from their brokerage accounts that they could enter into commodities trades, either like a broad commodity index or, gold, silver. If they like base metals, we had a base metals fund, all different ways to invest.
That's fantastic. And I'd like to talk to you on the topic of commodities with what's happening in the Ukraine. I mean, we've seen on Invstr, some of the most active instruments are the commodities instruments, gold, silver. So given your background, what's your take on commodities going forward? And, where do you see things going?
Well, it was interesting because for weeks and weeks and weeks, actually going back months and years, the Ukrainians and the Russians have been having a skirmish on the battle,
Right.
And then more and more troops built up. And I do a weekly call with a lot of commodity people, and I'd say,
Right.
"Are we seeing this in the price of gold yet? Are we seeing it?" We never
Right.
say no. Then all at once, when it got very real, gold spiked. Gold
Exactly.
popped up, and gold becomes what they call a safe haven asset.
Yes.
People rush to it in times of uncertainty. And so
Right.
gold popped up from around 1800 to the mid 1900s, and it's not too far from its all-time high that it hit at the start of the pandemic.
Right.
And then a few days later, everyone realized how big an oil producer Russia is,
Right.
and what some of the economic sanctions were. And so now gold has gone through the roof as well. It's well over $100 a barrel, and there's estimates that it could go higher. So those are two direct ways on commodities. Another thing I'll just mention is palladium. Like when you build cars and you need a catalytic converter, a lot of palladium goes in there, and I think 40% of the world's palladium production comes from Russia.
Right.
So palladium prices are up as well.
Very interesting. And what do you think is going to happen? Do you think this conflict is going to be drawn out, and so prices will remain high for a while, or do you think it'll be short-lived?
Well, I sure hope, for many, many reasons, that it's short-lived.
Right.
Humanitarian especially.
Absolutely.
But I think we'll just have to see. What's funny about, so oil was fairly tame going into this, but gold was already peaking up, because even before people were talking about Ukraine, inflation was on everyone's mind.
Right.
Inflation has hit like 40 years high that we haven't seen, since the late 70s, early 80s here in the
Exactly.
US. And so gold was high off the back of that, and just then further kind of fortified by what's happening in Ukraine. So I could see, even if Ukraine settles down, which I really hope it does, I could see gold still being in play, profiting, because again, the level of where inflation is at 7-8% running versus rates, and I'm talking about the U.S. of 1 to 2 to 3%. That means the real rates are negative. So,
Right.
So the Fed's going to have to hike rates up and up and up just to catch up with inflation. So that's that's bad for consumers. That's bad for your purchasing power, but
Right.
it's good for gold. And when I say
Do
gold,
you
it's actually
think
good for silver prices as well.
exactly?
Precious
And
metals.
do you think the market's already priced in those hikes, or you don't think they've priced in the magnitude of hikes that we're going to see?
I think the fixed income markets have probably priced in some of the hikes in their valuations. Not all those hikes, but I think people are counting on inflation to come down naturally. That some of
Right.
that a lot of the inflation is built into supply chain issues. They think so. The Fed maybe doesn't have to catch up with 5, 6, 7% in rate hikes to catch up with inflation. Maybe they can bring inflation down to meet it.
Right.
The Fed has a goal of 2% inflation per annum, and for the last several years they haven't even caught up with that. Inflation has been very much under control, and
Right.
interest rates, as a result, have gone down to, well, in the U.S. a bit close to zero, and in some of the European markets below zero. These are
Exactly.
negative rates. So the inflation story, hopefully, I'd love to get back to the inflation story. That means the Ukrainian story is dying down.
Exactly. Well, yeah, I think we're all hoping and praying for that. Now, I want to ask you about gold as a safe haven, because with the advent of crypto and the popularity of crypto, a lot of focus was on, oh, crypto as that alternative asset class that protects you against inflation. But can you comment on that? Because you haven't really seen that, have you?
No, in fact, people used to kid me. They say, Kevin, gold is just crypto for old people. And I
Exactly.
said, yeah, that may be true. And what's interesting is, over the last year or two, as Bitcoin has made its rise and then kind of
Right.
plateaued, we've had a lot of comparisons between the two. And I'm not saying go, invest in gold, not crypto, or invest in crypto, not gold. They
Right.
basically have two different unique purposes in your portfolio. I think what we saw when inflation was coming up and people said, well, Bitcoin is probably a hedge against inflation. We saw Bitcoin kind of correlate to the equity markets and pull back a
Right.
little bit. So we didn't see that. And again, it's kind of too early to tell. Gold has a 50-year, very trackable record since the early 70s, when the gold standard broke down and gold started trading freely along with currencies.
Right.
Crypto has CME futures listed at the end of 2018, or it started
Right.
2018. So
Right.
the track record just isn't there. So I think that it's too soon to say whether Bitcoin and crypto eventually does become kind of a hedge against inflation.
Right. No, that's an interesting point. And as you said, we see that gold endures as the safe haven, even when everybody was saying it was crypto for old people. But you see, everybody, even the young people on Investor are buying gold. So it's not just
Yeah.
for old people.
And it's not just for people like when some of the biggest buyers of gold over the last few years have been central banks.
Right.
Central banks are bolstering their balance sheets because, they've, especially during the pandemic, they've taken on a lot of extra debt through fiscal spending
Right.
to get through the pandemic. So now the debt load is higher, and I think some of them think their currencies may be a little bit at risk as a result. So they're bolstering their balance sheets by adding to their gold holdings, which is, I think positive for those countries and positive for gold investors as well.
No, that makes sense. Now, you talked about COVID. What are your thoughts on that? Clearly, it's not in the headlines right now with everything going on, but do you think that should still be a concern?
I think, I think COVID's like one of those things that we've had its funeral 2 or 3 times over the last couple years,
Right.
saying, "All right, we're through it," and then always,
Right.
well, what's this Delta variant? What's this Delta variant
Right.
I'm reading about? Then, okay, we're through it again, and what's Omicron? And
Right.
so
It's like
now
a cat with
we think
9 lives.
exactly. So now I think we all think we're through it again, and I hope we are. But I think everyone just has to stay vigilant. I love the fact that vaccines are becoming more and more prevalent. I love
Right.
the fact that certain places are taking masks off, and
Right.
we can't live like this forever. So, but it definitely has an impact on travel, on like the cruise industry, on hotel, and a lot of components, and energy too. Like, so
Absolutely.
the longer COVID's around, the fewer people who are flying, and the less jet fuel we need. So it's a story to watch closely still, I think.
No, that makes sense. I mean, last Thursday on the 24th, we had Freedom Day, so to speak, here in the UK, because Boris Johnson came out and said he was lifting all the rules on COVID. And, ironically, the same day that you had the invasion of the Ukraine, where freedom, versus authoritarianism is being fought out right now. But we feel free here, but I think it's still a concern, as you say. Hopefully the variants continue to be mild, and we can relax about that. Now,
it's funny in New York City.
Yeah.
One of the funny concerns is Kyrie Irving, who is one of the best players for the New York Nets, or the New Jersey, or the Brooklyn Nets. I'm aging myself. The Brooklyn Nets hasn't been able to play home games all year because of New York City has more stringent mandates around vaccines. So he can play away games, but he can't play here in New York. So everyone's hoping that the mayor lifts that before the playoffs start.
No, I can understand. And clearly that was an issue with the tennis as well, with Djokovic. So
exactly.
It's playing out in the sports arena, that's for sure.
That's right.
I wanted to pick your brain on oil, because the policy in the US, we were energy independent, and then policy changed to not continue promoting the producers, so to speak. And now with the conflict, do you think policy might change in the US to focus on this versus the focus on clean energy that we've been having, which has maybe put us at a little bit of a risk in this geopolitics that we're seeing play out with Russia, who's a big producer of oil?
Yeah, I think, leaving politics aside, I think we've realized, like restricting our policy so much with shutting down the Keystone Pipeline and being less friendly to more exploration in some of the places where we know we have large reserves. I think everyone thought, well, the only risk of doing that is economic. It's not, and it's for environmental reasons, and the environmental reasons are very valid, and we have to look at that. But I don't think anyone saw what was going to happen with Russia and how much strength we've given back to Russia on the political arena because they are now such a big supplier of the oil. So I would hope that the administration would revisit that. And I don't think it takes. I think if they just indicated a willingness to change and get a little bit more constructive in their policy, that could send a huge signal to the markets.
Right. I mean, I know Germany with the pipeline with Russia, that was always a concern for me, that we would be dependent on Russia and then we'd have a conflict and then they use that against you. What do you think the Europeans do in the long run vis-a-vis their energy independence?
Well, I think, and this is my personal view, but I think nuclear energy, and Germany was a leader in that, you can do that in a safe way. And so I think they were, they just shut down their nukes like way too quickly, moved to solar, moved to wind, and we see that that's just not sustainable. New York City had Indian Point was the New York nuclear plant that I provided up to 40% of New York's base load for the last few decades, and they closed that down last year. And one of the reasons they closed this down is because we have, they say, very abundant, cheap natural gas from fracking and things like that, but that's not endless. So I think it's short-sighted the way they've exited nuclear, and so I think we need to reinforce. I think fossil fuels will eventually go away, but not as quickly as they think. And so just to keep stability in the world politically and economically, I think we just have to give a little bit of a nod back to fossil fuels for a while. Again, I know global warming is a real thing and the damage, and we have to get on that, but we have to be smart about it.
Right. That's a very good point. And what do you tell your two daughters about investing and what would you tell them about what mix they should have of commodities in their portfolio, if they even have a portfolio right now?
Well, my daughters, they're in their 20s, and one was out of college for a year, and now she's back into grad school. So she doesn't
Right.
have many investable assets. The other one is working for a
Not
law
yet.
firm as a paralegal, and she's building investable assets. But you can. I love my children, but you can only, they have the interests they have, and they both went to liberal arts colleges, and they very much humanities focused. Neither of them are thinking about getting their MBA like Dad has, and
Right.
so. But now they do have an interest in finance and things like that. So I'm going to encourage them to sign up for the Investor Academy, start using the educational tools on Investor, and kind of going from there. I think it's a great place to start.
No, absolutely. I think as a parent, I know my grandmother would get me bonds, when I was a kid. And sometimes I wish I would have had stocks, and how it would have grown over the years. But as a parent, and I've got a 6-year-old, yes, I'm already investing for her college, so to speak, and her future. And I think the sooner you do it, the better. But I also went to liberal arts school, and I got started, after I graduated. But I wish I would have gotten started when I was still just a child. But hopefully soon we're going to have our Investor Junior product, where parents can set up accounts for their kids to start investing in their futures, and also teaching them the markets through the academy, through incentives with allowances, and also via the Fantasy Finance League. But yes, Kevin, you have to get your girls investing, get those good financial skills right now while they're still young enough to mold them.
No, that absolutely. And I think, I've only been working with Investor for not even 2 years, but I know it's been around for many years, and it started out as the educational platform, which is the right place to start.
Right.
Start, because you have to learn what you're doing before you start to do it. I learned backwards. Back when I started investing, I opened a brokerage account and lost money many different ways along the as I learned what not to do. And if someone had been there to teach me a little bit more about how to invest before I did it, so paper trading, or fantasy,
Right.
the fantasy trading, I think there's a lot of value in that.
No, but I think, Kevin, it's great that you share that story, because I think so many of us, our initial investments weren't necessarily the best, but when you stick to it, you learn. And sometimes that's the best education, but better if you can do it risk-free on fantasy finance versus losing real money.
Yeah, it's cheaper anyway.
Right.
I'll agree with that. Yeah.
So one last question for you. In terms of your own portfolio and your exposure, what's the mix that you like with commodities, given your background in commodities?
Well, I think commodities over time are what they call mean reverting,
Right.
meaning kind of there's more demand than supply, so prices go up,
Right.
and then the supply catches up too much, and then prices go down.
Yes.
And so it's like a big roller coaster. They go up and they go down. So
Right.
I think the biggest lesson I've learned over the years is, so if say I have $100 and I put $10 or $15 of it in commodities, and commodities run up to $30, the best thing to do is to bring it back down to 15%. And then I avoid just losing that money on the way down. And then,
Right.
as the commodities are cheaper, you allocate more to it. So
Right.
it's kind of like
Rebalancing
dollar
your
cost averaging.
portfolio.
It's rebalancing. Exactly. I think it's important, not to just not just invest and then kind of watch where it goes. I think figure out what your allocation levels should be, and try to have some kind of discipline to stick to it. It doesn't have to be weekly or monthly. It can even be quarterly. It's just whatever's right for you and whatever you feel comfortable with.
No, that's great advice. And I know some of the big funds, that's what they do as well. They rebalance on a monthly or quarterly basis. Well, thank you, Kevin. We've enjoyed having you today. And We'll see all of y'all on the next In the Green. And remember, happy investing.
Money making moves, machines with tools and drills making.
This is Nora Lee. I'm not a financial advisor, and my comments should never be taken as financial advice. Remember, investments come with risk, so always do your research and analysis beforehand. Happy investing.
Money making moves, machines with tools and drills making.